Hello, everyone. Welcome back to Navellier Market Buzz, episode 19. I'm Crystal Navellier, and I'm joined again this week with my father, Louis Navellier. We hope you all had a wonderful New Year's. Now, Dad, we have to talk about Tesla. What are you thinking about them at this point?
Well, it's interesting. They kind of masked the strength after New Year's Day because they went down. Their fourth quarter sales were up 2.2% compared to a year ago, but their overall sales did drop finally. So they're struggling a bit in China. They've had some layoffs in Germany. In the US, they're still doing pretty good. Getting rid of that $7,500 EV tax credit will actually help them. They'll become more dominant versus other competitors in the US. Probably Hyundai is their biggest competitor right now. But Tesla's a lot more than just its cars. Their full self-driving, or what they call FSD, is getting rave reviews. They are selling tons of these power walls and commercial battery storage facilities. I'm in San Diego here, and there's a lot of solar and power walls here because San Diego Gas and Electric a long time ago gave up its grid when California was trying to, you know, have a state grid. And anyway, so when you move here, it's you have to kind of put your own solar and power walls. In fact, that's what Uncle Jeff did when he and Aunt Debbie did when they moved here. Otherwise, electricity is very expensive. But Tesla's has a booming Powerwall business and energy storage business. And then finally, when they get that robotaxi going, I think it's really going to help them. Obviously, they'll be competing with Waymo, which is Google. They use totally different systems. Waymo was based on LiDAR, which is radar. We have LiDAR in some of our cars, especially for night vision, to see animals and things when we drive around. Tesla uses a camera-based system. So it's going to just be interesting what system is better. And so Tesla's started to rebound, but they're the one that kind of screwed up the whole party. Now, we're not recommending Tesla. It does rank a B in our system, which is a buy, but it just doesn't hit all my criteria. Their operating margins did start to expand the last quarter. If they resume expanding, that would be good for the stock. Um, then my other comment about Tesla is I do hold in some managed accounts and some clients asked me to buy it for them.
Are the Chinese EV makers still doing well?
Super well. Li Auto just reported a big sales increase, but BYD is the leader. And of course, they're vertically integrated. They make their own batteries. In fact, Tesla uses the BYD Blade battery in its Model Y that it makes in Germany. As you go farther up in the hemisphere, the lithium ion batteries don't work as well when it gets cold. And Germany's up there pretty high, kind of like Canada. So an iron phosphate, a battery will last a lot longer. You can 100% charge it. If you crash the car, it doesn't catch on fire. There's a lot of good things BYD is doing. But BYD has already sensed the shift in the market, and they're building more hybrids. But not only leading EV sales internationally, they are also selling a lot of hybrids. But Li Auto makes kind of a luxury EV. They're based in Hong Kong. They had a big sales increase. So China, the EV boom is going to continue in China. China's very proud of its industry, but their cars are so much cheaper because they use the predominantly iron phosphate batteries. And if we start to put those batteries in EVs, and Tesla does on its cheapest Model 3, Ford does on its cheapest Mach-E, then prices will start to come down.
So help me out. If the EV sales remain strong, why did the S&P Global PMI for China decline?
Because China's a huge manufacturing economy and they do a lot more than just solar and batteries and EVs. They are really struggling. You got to realize the average person in China invested heavily in real estate, and there's a lot of what they call ghost towns in China. Big buildings people bought for speculation they never lived in. In New York, you have a very tiny skyscraper on your Central Park that was bought by a lot of Chinese. And the joke is no one's living in it. I'm sure someone's living in it. But that's what they do. They literally would buy real estate for investment. and they got overbuilt. And then China is shrinking as a nation. They lost 2.08 million people in 2023. I'm sure they lost another 2 million people last year. We'll get the official number soon. And it's just really hard to grow your economy. The other thing is President Xi is an authoritarian. When he became president for life, he essentially got rid of what we call a lot of the reformers, a lot of the pro-business people, and there's just a lot of chaos in China right now. He's been purging his military, but a lot of decisions don't get made unless they go to President Xi, and it's hard to do everything. So that's why they tend to get overbuilt so quickly, and they're putting tons of stimulus in their economy. Their interest rates are collapsing. The 10-year bond yields at a record low. Their central bank's going to be cutting rates a lot. And so they got a lot of other problems out there. And then, of course, they may soon have bigger tariffs than Mr. Trump or President-elect Trump. But he did invite President Xi to his inauguration. I don't think he's coming, but there will be a dialogue, and that will be very interesting.
I see that the ISM manufacturing report in December improved. So now does that mean that the manufacturing recession is almost over?
Yeah, not quite. It did improve dramatically, a lot more than economists expected. New orders was very encouraging. It was, I think, 52.5. And any reading over 50 signals an expansion. But the overall number is still below 50. And manufacturing in America has contracted for 25 of the last 26 months, according to ISM. And but looks like we're trying to crawl out of a hole finally. A lot of just fixing manufacturing is fixing the housing market. When people are buying homes, they buy a lot of durable goods, appliances, furniture, and it's imperative we fix housing to get manufacturing fixed in America. But it's very, very encouraging what we saw. There was a big upturn in autos. Airplane orders are doing better. Okay. So these are also big things that drive manufacturing.
So now let's switch over to what you expect from the ISM service report, the Fed's FOMC minutes, and also the payroll reports.
The ISM service report for November was very disappointing. It decelerated sharply, and no one expected that. So we want to see it's still above 50. It still says it's expanding. And the U.S. is a service-based economy. 70% of our economic growth is services. So we want to make sure that's still healthy. It looks like it was a good holiday shopping season, but nothing outlandish or anything. So we just want to see that it resumed expanding. The other thing on those Fed FOMC minutes, those are going to be very interesting because there was some dissension on the Fed. One of the Fed governors, the Cleveland Fed president, voted not to cut rates. There was a lot of disagreement on what we call the dot plot, how many rate cuts there's going to be. The consensus was two, but some were expecting three, others were expecting one. So we just want to get a feel for the infighting within the Fed. Jerome Powell, the Fed chairman, tries to, make sure everybody moves in tandem with him, but that has fallen apart. And he admitted during his press conference, which kind of riled markets, that they seem to be losing a grip on forecasting economic outcomes. So that didn't inspire confidence, but that's what we want to see. And so those minutes are going to be more interesting than normal. As far as the payroll reports are concerned, ADP on Wednesday is going to be the most accurate. That's the private payroll survey. I don't really trust the government report on Fridays because there's a lot of seasonal adjustments. The government still thinks we hire a lot of workers to work the stores during the holidays, and even though everybody's shopping online, although they do hire more people for the warehouses and delivery services. So there will be a big seasonal adjustment on that payroll number. But and then of course the revisions are always interesting. Unemployment has risen, in America. It was 3.4% several months ago, and last I looked, it's 4.2. So we want to see if there's still pressure on it. If there is upward pressure on unemployment, it will literally cause the Fed to just continue to cut rates. The other thing is continuing unemployment claims are at the highest level in the last few years. So there is some structural unemployment in America we got to keep an eye on. So unemployment's going to influence the Fed heavily.
Now, can you explain what is a carry trade and does it have any influence on the Mexican peso?
Absolutely. You know, one of the surprises last year is how weak the Mexican peso was. Because Mexico is a very, very strong manufacturing economy. A lot of people think they're the new China. Okay. Of course, we have facilitated that with NAFTA, and we've moved a lot of plants, and so have Germany and other manufacturers move their plants to Mexico, and then they come into the United States with no tariffs because of NAFTA. And Trump may try to modify that, but the amount of commerce that we do with Mexico and Canada under NAFTA is immense. And of course, Trump did threaten these 25% tariffs if they don't secure their borders, but both countries seem to be doing that right now. So going back to Mexico, there are two theories on the carry trade. One is that Japan, where rates are very low, was putting money in Mexico to get higher yields. But then the strength in the Japanese yen caused them to unwind that trade, which shoved the peso down. The other theory is a lot of folks in Mexico were investing in the United States and to get not only higher rates but benefit from our strong dollar. So carry trades are again where you borrow in one country to invest in another, and you play the rate differentials. But what screws it all up is the currency, and unfortunately. That has weighed on the Mexican peso, but I'm very optimistic for Mexico long term. I mean, if any country is going to benefit from our economic growth, it's Mexico. So I would hope that the peso firms up fast.
So now on New Year's, Ukraine cut off the Russian natural gas. What are the consequences going to be?
Well, there's some countries that don't agree with Russia, countries that are not obeying Mr. Putin right now, and their gas has been cut off and they've stopped their manufacturing. But this really hurts Slovakia and Hungary, and then that gas that used to go through Ukraine from Russia often does make its way to the Czech Republic and Austria. So Slovakia and Hungary are the first victims, and that's bad because Germany has been outsourcing immensely to Slovakia and Hungary. Like your Macan truck was made in Slovakia last, I thought, and so is the Porsche Cayennes. And in fact, our Audi Q8 was made in Slovakia. So again, you need cheap gas and to have cheap electricity so you can um, have a manufacturing economy. And then the reason Hungary is important, Volkswagen makes almost every one of its engines in Hungary. Well, the only exception I think is Porsche. The flat six that Porsche has is made in Zuffenhausen, but all the other engines are made in Hungary. Okay, for Volkswagen Group, even the Bentley engines. So what happens is this has hurt Germany's economy because their electric prices are double ours and they're triple China's, and now it's hurting some of the countries they outsource to. So they have to get this fixed. Now, there's this cold front over North America right now, especially the Midwest and East, and Europe gets those quite a bit too. So yeah, some people may get to stay at home because they have to close factories. This also not only hurts Ukraine because they used to get up to $1 billion a year for transit fees for this gas. It also does hurt Russia somewhat. I'm sure Russia will divert the gas somewhere else. But it's fascinating that Ukraine and Russia were doing commerce with each other while they're at war with each other. It almost doesn't make sense. And but I guess Ukraine just in good conscience can't do business with Russia. And so this is going to be very interesting what happens.
So now kind of switching over to stocks, one of our subscribers wanted to know what you thought about Supermicro versus Vertiv Holdings.
I would own both. I want to be very clear on Supermicro. We've been in that stock a lot earlier than most people, so we have gains. It has been on a roller coaster because they have a new auditor, and their audited results will be out shortly. But they do, last I looked, have 180% forecasted sales growth, and they make the servers that go in the cloud centers, and they're water cooled for the NVIDIA chips. We have a friend in the AI chip business in Boise, and he thinks those Supermicro racks are the best. That's that. So we are very bullish on Supermicro, although it has been on an incredible roller coaster because there was a Hindenburg report saying that their sales are inflated, and what it is they have their order backlog is so big. They're booking sales that they may not deliver on in 4 or 5 years, but it just goes to order backlog. So I don't have a problem with it. Vertiv, of course, was one of the best performing stocks at S&P last year. We've been in it for some time. It still ranks very, very high. And they help build out the cloud and those water cools server farms that Supermicro facilitates as well. So both are great stocks to hold. And but you have to take a brave pill with Supermicro. And both stocks are off to a strong start this year.
Another one of our subscribers wanted to know what you thought about Sezzle and CLS.
Sezzle, of course, is did also get hit with a Hindenburg report. Some of our stocks are explosive, and when they go up 400 or 500%, these short sellers come in and try to prick that bubble, and they did that on Supermicro, and now they're doing it on Sezzle. But the stocks have come roaring back because there's no analyst cuts. Sezzle, I guess, is the best way to say Sezzle, and another stock we have, Payments Systems, that's PAY. They facilitate people that have credit problems. So when you buy something, you can make 4 payments. You can put it on layaway and pay a little later. And Sezzle borrows at pretty high rates and marks them up even further to the consumers. So, we have a situation in America where uh, credit default rates are the highest in since 2010. And if you're a struggling consumer and you don't want to have a bad credit score, you might have to use Sezzle or Payments, and that's what they do. They facilitate payment plans. So some people think they're predatory, but they have a service, and there's always a certain amount of people out there who will have credit issues. So Sezzle is one of our most explosive stocks, and it's off a good stock this year. Celestica CLS ranks super high in our system. I've had that stock for some time, and as long as they're A or B rated, you can continue to hold it, and you're showing the rating right now for Celestica, so it's a strong, strong stock to own. And if you haven't bought it yet, you're welcome to buy some more.
Can you explain to me why gold resurged after New Year's Day?
Yeah, it's because the central banks around the world are screwing up. Um, so let me give you some examples. China's rates are collapsing. They have the lowest 10-year bond yields there ever. Um, I think they're going to crack through 1.6 here soon. They've got all kinds of incentives to try to lift their economy. But China is losing population at a rapid pace. So is Europe. And there's just a lack of confidence in governments as well as central banks. And that causes everybody to buy gold. And much of the world is in a recession except for America. So it's up to President Trump to take our sputtering 3% GDP growth from mostly services, fix manufacturing, get us to 4%, get a peace dividend, like making peace in the world, get us to 5%. We won't be able to sustain that long, and lift the entire world. So in the meantime, everybody's just loading up on gold because there's just a lack of confidence in governments. Now, our rates are still very high in America compared to everybody else. But as rates come down elsewhere, our rates will come down too, and that will further fuel gold buying. So, what you need to suppress gold from going up is a strong currency, which we have, high rates, they're moderately high, and a strong economy. And of course, there's cultures out there that love gold. India, China, the Middle East. And of course, we have a lot of gold bugs in America as well.
So you discussed a flight to quality on a podcast you did after New Year's Day. Can you give us some examples?
Yeah, so again, it looked like the market wasn't going up right after New Year's Day, but it was under the surface. And what it was is Tesla's a big weight in NASDAQ, and Tesla went down because their annual sales declined, but their quarterly sales are up. But nonetheless, Tesla masks the strength under the surface. So I'm ecstatic because, as far as I'm concerned, uh, there's a flight to quality underway, and I saw it in my stocks. So some examples would be Nvidia. Their sales are forecasted to be up 72%. Their earnings are forecast to be up 63.9%. They still have positive analyst revisions. So you're showing how NVIDIA has done well. Uh, Carpenter Technology, their sales are forecast to be up 7.7%. Their earnings are forecast to be up 90.4%. Again, positive analyst revisions. They're off to a great start this year. Sprouts Farmers Market, their sales were up 15.1%. Their earnings are for forecast earnings are supposed to be up 47.3%. Positive analyst revisions. When the analysts revise their estimates higher, it creates a lot of earnings surprises. Decker's Outdoor, we've talked about that. The shoe company, DECK, their sales are forecast to be up 9.5%, and they have positive analyst revisions. We talked earlier about Vertiv, VRT. Their sales are supposed to be up 15.5%. Earnings supposed to be up 45.9%. Again, positive analyst revisions. These are all stocks that started the year very, very strong.
Now, finally, what are some small caps that have started this year strong as well?
Yeah, and small caps are again like bunnies. They sit, they hop, they sit, they hop. So when they move, it's significant. Also, the fact that small caps participate means that we're getting a January effect. But Argon AGX is probably the best example. Their sales are supposed to be up 20.2%. Their earnings are supposed to be up 28.7%. They have positive analyst revisions. Kava's sales are forecasted to be up 16%. Their earnings are forecast to be up 118.3%, and they have positive analyst revisions.
I love Kava, and they're really competing against Chipotle right now.
Wonderful. Keep eating there. I appreciate it. Help my stocks. GigaCloud, their sales are forecast to be up 17.8%. Powell Industries, which we talked about a lot, their sales are supposed to be up 19.9%. Earnings are forecast to be up 31.8%. Very positive analyst revisions under Powell. That's a good sign. Sezzle, we already talked about, has had positive analyst revisions. And then Vital Farms, which we've talked about, this organic chicken stock, their sales are forecast to be up 18.1%. So these are all examples of small caps that popped in the new year. So not only do we have good leadership in the quality stocks, it looks like we're getting a January effect. So that has me very, very happy.
Great. Well, thank you so much for answering all my questions. And thank you to you all again for liking and subscribing. Once again, if you have any questions, please leave them in the comments below. But until then, we'll see you next week with a special guest.